So having a house is all American dream, right? Right? Having a house means you're successful. But is it really making you successful? Is it really making you reach your financial goals? Here's a fact. You're kind of looking over here. There's two kind of house, the house that makes you rich or the house that makes you poor. Here's a little bit of fact over here. If you have a W-2 job and you get in a 30-year mix fixed rate mortgages, even if it's a really low rate, you'll probably be looking at most people maybe $1,000 to $3,000 a month of payment. If you bought a luxury home, you'll probably be paying $5,000 or more per month. And if you're having a high paying job, like let's say 300K a year, which is pretty high for most people, and you will be looking at potentially a $15,000 to $20,000 income after your tax. If you take a mortgages of, let's say you buy $1 million home. In fact, in Seattle where we live, this is the average rate. You have to spend more than $1 million to get an average 3-bedroom or 4-bedroom house. So what do? You have to pay your mortgages, and the restaurant will tell you you're going to pay for this $1 million homes about $5,000 to $6,000. Okay, affordable, right? Not unless if you're adding in ever increased property tax in Seattle, and not unless also you added in your insurance payments. And then if you decided you're going to go skim on down payment because you don't have, 600K that's sitting around or $500,000 sitting around to buy that $1 million home, then you have to also pay a P&I tax, which is anything below 20% down payment, you have to actually pay that insurance. So when all tagged on, said and done, you're probably looking at $7,000, $8,000 of payments every single month, right? That's a fixed expense that you have to spend. So your purchase power for that whole entire month, all of a sudden now for people who maybe make a little bit more, 200K or 300K, so you not only have like $7,000 or $8,000 left. Do you think you're really going to live in $1 million home and then just eat instant noodles all the time? Probably not likely, right? So your expenses for average of 4 people family, you go out and eat out and you're going to treat yourself and you spend some money, and then pretty soon you have very little left. So what are you going to do? You have no savings. And then in order to make that worse, that mortgage payment is going to be 30-year. Do you think you're going to be doing the same job 30 years from here? And then if you're rich enough to make that much money and have $1 million homes, most people are 40 years old. So 30 years from here, you're 70 years old. What are you going to do? You still have that mortgage, right? So if for some reason your boss has decided that they no longer need you, your job is not secure, and now you're making $0 and you still have that $5,000, $7,000 of payments, what are you going to do? Guess what? Mortgage company are not so kind. Sure, they may give you leeway for 6 months or so, but if you're not finding another job, you're going to lose your house. And if you're late on one mortgage payment, they're going to be sending mail after you. They're going to call you. They're going to send a collector after you. Life is going to be miserable. So do you still think owning that house is the best decision in your life? You probably have to force to sell it for cheap to the bank, right? So here's why your house is making you poor, because half your income is already paying for mortgage, and now you have to scrape for the rest of it. Now, interestingly, we're going to be talking about today, how do you actually make your house into an asset from a liability? Think about this. So now scenario here is that you still have that 4-bedroom house. But instead of buying 4-bedroom house that all mixed together with your family, let's say your family 4, okay, we'll take that as average. Maybe you want to buy a slightly bigger house, maybe a house that has separate entrance, maybe a house that has different level. So you can kind of put a door in between them and live upstairs or downstairs, whatever that you want to do. I would suggest live upstairs because you don't have to hear people running around. And then rent out the extra room in your house on the downstairs that has separate entrance, or better yet, mother-in-law units, where there's separate entrances. You don't even see them if you don't want to see them. Put a fence in between them, right? And that is going to give you extra incomes. Now we're talking about, let's using that example again. Let's just say your monthly mortgage is $5,000. I'm going to write it down, $5,000. And then you're renting the downstairs unit, having a 2-bed, 1-bath. It's very popular for that, for Airbnb. Or you can rent it out as a permanent, right? But if you're looking at that using house hacking tricks to rent it out as Airbnb, let's say 2-bed, 1-bath. I kind of looked around Seattle, really good location. You probably can charge $150 a night. I'm being conservative over here. So 150 times 30. What do you got? You got $4,500. Wait. But my mortgage is only $5,000, including taxes and all that stuff. And this guy, if it's 100% occupied, they're giving me $4,500. They can charge a cleaning fee as well. So I'm living here for free. Like, oh my God. And guess what? If your cash flow, let's just say we're not super rich over here. Our cash flow is $10,000 a month, let's say. That means $120K a year. I think for majority of us working in tech, we'll make more than that. And if you don't have to pay half your check to your house, someone's paying for that. And guess what? You have $10,000 to spend. So here it is. You can spend money like a cash king over here, or you can save that $5,000, $4,000 that you have. That's half your paycheck. If you saved half your paycheck, then over the period of time, and we have a chart on our website, we show people like the scenarios. If you saved, don't just put it in the bank, of course. Invest in something that is giving you an 8% rate or 12% rate, you can probably retire in 10 years. So do you want to own that house that you're going to pay 30 years and thinking about, am I losing my house for? Or are you going to create a housing and making that an investment vehicle for you that actually create wealth in your life and then be able to help you retire in 10 years? I'll make that choice be yours. So takeaway from this session is that turn your house into an asset for yourself. Instead of paying for it and making that a monthly obligation, think about different ways that you can make money out of it. So this can be renting a partial of the rooms out or creating a space when you can make extra income from rental income and then offset some parts of your mortgage and then use that money to invest in something that is generating higher return. Not just spend it, but use it to generate a higher return. And this compound effect can help you quit your job a lot faster. And then did you know there's a tax rule that you can hold on to a property for more than 2 years and then you don't have to pay tax for $250,000 of gain, or as a couple, 500,000 gain, that's $500,000, and be able to move to somewhere else. So this, and then sold it and make money out of this as well. So you get some equity increase and you get some cash flow increase. That is going to be the vehicle that helps you quit your job sooner. Today, if you like what we do over here, please subscribe to our channel and we'll see you next time.